Well, my Chinese friends are moving tonight. We're going to get a second big pile of money coming into infrastructure. This is very good for China, it's very good for Asia. It's very good for iron ore, it's very good for copper, it's very good for agriculture. And the Chinese don't have to, they don't have to borrow money, and they don't have to write a big deficit. They got the cash. All they have to do is write a check.
No capital.
So I'm very positive on Asia. I think it's time to do some select buying in Asia. And I'm positive on some commodities, as I just said. There's a correction going in gold, as I said last week. But gold is not used as jewelry anymore. India is not importing gold anymore. Dubai is not buying gold anymore. But the price of gold is still $900. That's because gold is used as a reserve currency. And I think it's going to be used as a reserve currency more and more. And I think we're going to see the price of gold flirting with $1,100, $1,200 by the end of the year. Or sometimes before the end of the year.
Thank you, sir.
Point of all of this, and actually, I'm very much in agreement. Because, you know, China announced some fantastic PMI numbers last night, and every once in a while you do have to listen. We have a very good economist that some of you know in London, and you know I think we're seeing copper firm up, and we're seeing Baltic freight firm up, and that's why I sort of very timidly said that I thought we might see a rally. And the problem, we might see a big rally, and it may only last. The problem is that everything's sort of compressively done, everyone jumps together. The only other comment I'm going to make about gold is, and we're trying to learn about this, and there's some people in our Boston office that are teaching me about this. Look at the effect that ETFs are having on gold. And if you look every day, they publish, I think, the combined tonnage that has to be bought in order to satisfy the ETF, the bullion demand in ETFs. A lot of that, I think, is what's pushing, who made that comment, I think you did, about what's actually pushing physical. Our view is we're very bullish on gold. I don't know about next week and next month, I could care less, but I think gold is going up simply because it's an alternative currency. It's very simple. It's, you buy the dollar, you get nothing. You buy the yen, you get nothing. Tomorrow, Trichet is going to cut rates. You buy the euro, you get nothing, and you get a bonus prize. You get Eastern Europe with all its banking problems. So you've got the three main currencies in the world that yield nothing. Gold yields nothing, so you might as well buy it, right? And you got to store it, but you get to shine it, and play with it, and it lasts longer than paper. So people will buy it, and you're going to see small. You've seen somebody mentioned Dubai. There's been selling. I mean, Dubai is bust.
Absolutely.
But I think past all of that, if you do the calculations, just the size of the markets in bills or bonds or notes or in anything, gold's going to go up. And I'm much more bullish than my learned friend. I think it's going to go much higher than 1,500.
Thank you, sir. Sir Ronald, you...